that EVs are unlikely to pose a threat over the medium term, and management is also keen in exploring some inorganic opportunities and evaluating new phases or new scope of businesses as well.
Okay, all right. So, Nal, thanks a lot for that. Well, the first tick is in. The Nifty opens up, gap up. We're getting used to this now. Nifty up close to around 60 points, half a century straight off the bat. Let's focus on a few winners. Wipro is up close to 100%. That's one of the winners. Mahindra & Mahindra is up close to 100%. And Ultratech posted good quarterly update. The street likes it. When you grow 20% on that sort of a base, it's telling you that they've gained market share as well. So that stock has opened up in the green. Hero MotoCorp on the flip side, well, those numbers were a little bit disappointing, and that's down close to around 1.5%. For Maruti Suzuki as well, down close to around 0.5% odd. But the breadth of the market is looking very, very good. Close to around 2,000 stocks are advancing in comparison to close to around 200 stocks, 250 stocks as well that are declining. The big movers, though, from the broader markets, which Rima will take forward. Gujarat gas flying away. The additional duty on propane being pulled into the country, well, that could give them a competitive advantage. So that's up close to around 4.5%. And Strides is flying away. Strides is up close to around 6% as we speak. But Rima, run us through the list.
Well, L&T Finance Holding is also a big mover with the change of guard there. The stock is open with a gain of 3.5%. Ashok Leyland has reported their monthly sales numbers. CV volumes have gone up by 5% on a year-on-year basis. The domestic CV volume growth is at 10%, and that's something the street likes. And the stock has been given a thumbs up, opens with a gain of 2.5% on that. In other auto sales numbers, Tata Motors has opened up with a positive bias, but no big gain, just up close to about 0.1%. On the losing side, you've got Maruti with a cut of 1%. Again, the street is disappointed by the June sales numbers, and Bajaj Auto sales are also out. Total two-wheeler sales are down 2%, and the stock is open with a cut of 0.5%. That's about the auto sales numbers. Some other gainers and movers include NCC. They won orders worth 2,000 crore in the month of June. There is some news on granules, which has pushed the stock higher by close to about 2%. On the losing side, softness seen in AMC companies. Remember, they had a double-digit rally on Friday. So today, profit booking seen in Nippon, HDFC, AMC, UTI, AMC, down 1 to 2% on all these names. Apollo Tyres, where Morgan Stanley has downgraded the stock to an equal weight. The stock opens with a cut of close to about 0.5%. So all in all, it's a pretty good opening. The mid-caps are moving in step with the frontliners, and look at the advanced decline ratio. I know it's only 2 minutes, but it's looking good.
Oh, it's looked good for a while, Rima, absolutely. And 0.5% again once more as we start another week of trade. Let's just have the Nifty up. So 80 points, I mean, galloping ahead. And, you know, what typically happens once you make new all-time highs also is the fact that, you know, you've got to be willing. I mean, if you are trading, you've got to be able to you've got to be willing to buy breaks higher as well, not just buy the dips, which basically has been the strategy all through, you know, the last 300-400 points when the market was in the range. But, you know, things pick up, pace picks up, momentum picks up a little bit. And you got to be willing to buy gap ups, etc., which is harder to do psychologically, mentally, but it's a bit of a change as compared to what we've seen earlier. So, you know, I think the Nifty Bank will come up on your screen where we hit 44,995 on the Nifty Bank. That's about 0.5% higher. And we were saying this earlier, maybe the Nifty Bank, which basically saw a bit of a later breakout as compared to the Nifty, has got more catching up to do, so keep an eye on that. We're, of course, with this kind of open once again at a fresh all-time high. Manish Gunwani is with us. He's head of equities at Bandhan AMC, a veteran in the institutional money management business, really. Manish, good morning. Great to have you with us here. Thank you very much for joining us. How are you feeling, Manish, on about markets with the new highs? You know, you guys at Bandhan are... You've got, in a way, you're growing the business, you're getting inflows, and you've got to deploy. And that's at all-time highs, always a bit of a challenge. How are you doing it?
Yeah, Prashant, I know it's all-time high, but if you see on a two-year basis, the market hasn't really done all that much. So I think it's a fairly interesting time in the macro, in the sense that globally, if you see, two surprising things are happening. One is everyone, or a lot of people thought that given the monetary tightening, we will see a big slowdown in global growth. Now, that surprisingly is not happening, especially the services side of the global economy is firing fairly big time. And we are seeing that global growth has surpassed expectations. That's the first point. The second point is that we are in a fairly peculiar configuration where the Fed is hiking rates, commodities are correcting, but at the same time, EM currencies are doing well. So I think the story of this year is actually the fall in the dollar, because if you see typically when the dollar falls, commodities go up. But the surprising part is commodities are falling, but yet emerging market and emerging market currencies, they're doing pretty well. So that's the peculiar configuration we're facing, which is kind of, I think, being the main contributor to this bull run of recent times. And I think it's difficult to see that changing, in the sense that the dollar is obviously very expensive on a fundamental basis, because it's done very well last 10, 12 years. A lot of EMs have good macro stability, whether it's India, Indonesia, and even the commodity countries like Brazil, etc. They've been beaten down over the last 10, 12 years. And we're also seeing central banks sell dollar. So I think that's the interesting point about this year, that I think the dollar trajectory is kind of driving a lot of movements.
Manish, morning. So in terms of fresh capital deployment, now banks is a consensus overweight. Earnings growth outlook is fairly resilient, robust. The valuations are reasonable. But what about the other two pockets where the growth outlook is still a bit uncertain or cloudy? One is IT and the other one is the rural economy, because the rural economy has gone through a long stretch of stress. Can growth pick up in these pockets? So if you would like to talk about and tell us, would you deploy capital in IT and rural, and how much of an overweight should banks be at current levels in our portfolio?
So as a fund manager, I think a bet on rural makes sense. Overall, our view is that the domestic economy is poised better than the global economy, because while we are seeing emerging markets do well at this point of time, the intensity of monetary tightening is such that you have to be prepared that at any time some big global event may happen, whether it's in credit or geopolitics, etc. But I think the domestic economy is on strong footing. Current account deficit, inflation, etc. I think India has done very well related to global peers. So our focus or our overweights have been more in domestic sectors, which include financials, as you mentioned, cement, real estate, industrials, auto, etc. So to that extent, I would probably bet more on a domestic segment at this point of time. Although I think that the capital that's flowing into emerging markets can drive a bit of global reflation. And for some time, given that India has outperformed a lot of the EM markets, we may see, especially China, I think we may see a phase where Chinese market bounces back and Indian market kind of underperforms China. But I still think that from a medium perspective, I would bet on rural versus IT at this point of time.
All right. Hi, Manish. Good morning. Manish, some of these new age themes, they listed and they bombed out. Some of them became half, some of them became a third. But in the past quarter, they came back in style from those beaten down levels. Do you think bulk of the, of the good news or any kind of recovery, management commentary, that's all in the price, or is there more room?
I am quite positive on a few of them. I think you have to be obviously selective, but I've always maintained that there can be companies which are temporarily loss-making, but that should not preclude you from taking a 5-10-year view and looking at these companies. Now, you will obviously need a higher margin of safety to weather the next few years of losses. But I do think that a couple of them look fairly healthy to me from a long-term perspective.
Fairly healthy from a longer-term perspective. Just a quick word on the asset management businesses, if you have a view, Manish. I mean, you're intimately aware of how they work. I mean, what are the profitability levers, etc. On Friday, these stocks were very large gainers, 10, 12, 15% kind of movers. What's the road ahead, according to you? And would you want to own any of these businesses?
So I think clearly this industry's market cap has suffered a lot over the last 2-3 years. You have a mix of different things, and some of those challenges still remain. So one part is the regulatory part, which obviously we saw change for the better in recent announcements. But I think that, and long term, we all know that financialization is a big theme. We think AUMs will definitely grow. A lot of these companies will become very large companies. The challenge is in terms of margins and competitive pressure. I don't think that really goes away. So we will have these cycles where people become very pessimistic on margins, yields, etc. And there'll be phases where people become overtly optimistic. So you have to be a bit of trading around these sentiments. See, this is a sector which has great ROE, ROC. It has good AUM growth. But it's a sector you have to remember that where a lot of people want to enter, and it's easy to enter in one sense. So I think, again, you have to be very cognizant of valuations. You have to be clear about which player is going to get market share. So I would think that if the stocks have done very well and let's say they continue to do well, you have to be a bit cautious on the sector.
Manish, I know it's impossible to predict the market, but do you see a scenario in the next 6 months where markets could decline 15-20% at the index level? Are there any such risks on the horizon?
Well, I think given the quantity of a correction, obviously prone to a lot of risk. We all know that short-term markets are difficult to predict, but I think we should not lose our bearings. We are still in the midst of a global tightening of monetary policy. I guess what has happened is the fiscal policy globally has been a bit loose, which is why probably growth has surprised. But I think clearly a lot of central bankers are very keen to get inflation down from even here, although inflation's fallen a bit. And when you are in that phase, clearly there's always a chance of a big credit event or some geopolitical action happening. So I think volatility in second half will be quite high. Second half of this.
All right, Manish, just hold on to that thought. We are getting some news coming in from Money Control. They are saying that Concord, the wheels are set in motions, and initial bids for Concord could be invited by August 1st. So we'll try to get you more on that story. But Concord is holding steady with a gain of around 2%. So just keep an eye out on that stock. And the other one that's moving very, very well is Suzlon. Now it's at close to around 16.5 rupees. Remember the stock in single digits. So Suzlon is moving higher on very large volumes. Manish, this renewable theme has come back in style. Some of those power-related stocks as well. Are you looking out for this renewable theme? And if yes, how to play that? Because there's very limited, choice out there.
No, I think power in general is a good theme because stocks are cheap. Between 2010 and 2020, we had a very big down cycle for this sector. And clearly, if we take a medium to long-term perspective of the power sector, most of the action will be on the renewable side. Now, as I said, obviously, there's not too much of direct link, but the other thing you can also look at, because we've seen this happen in Europe, for example, is that when renewable becomes a bigger part of generation, you also need a lot of investments in distribution and transmission. So that entire value chain of renewable generation, transmission, distribution, I think there are a fair amount of stocks there, and also the funding of that through financial of power, capex. I think there are a fair amount of stocks which can be used to play that theme.
ICICI Securities, I think on Friday morning, last Friday morning, I think initiated coverage on Suzlon. So it's interesting, right, that this is also happening. And I think they have a price target of 24 rupees on Suzlon. Stocks up about 7.5%, very large volumes for this point in the day. Manish, just a quick word, if you will, on insurers. You know, you were talking about financialization. That's the other big, large space where which was hurt. And again, for stocks have done well this year, but if you take a slightly longer view, 3-4 years, they've not really done very much. What's the view?
So structurally, first of all, I personally am bullish more on general insurance than life insurance in terms of premium growth over 5-10 years. But having said that, I do think that both offer decent risk reward. Life insurance, as you alluded, basically saw a lot of regulatory actions which went adverse for the stock movements. But I think the good part of that is that it's a fairly consolidated sector. You obviously need a fair amount of capital to enter. You need a brand where people who are buying policies for 10-20 years can trust that brand. So there is a moat to that sector. The second thing is, if you see the traditional experience of large economies, it tends to grow faster than GDP because it's a discretionary product. It's a very urban, affluent product. So in that sense, the top-down scenario on life insurance is great from a 5-10 year perspective. We've seen some regulatory challenges, and it's anyone's guess if those will aggravate. But definitely, I think there should be some exposure in your portfolio to this.
Manish, we'll leave the conversation here. Thank you very much for joining in and look forward to chatting with you more frequently. By the way, for the markets, we've hit 19,300. We opened with a gain of about 50-60 points, but quickly have scaled up and added on more than 100 points. The Sensex too is up close to about 400 points. The corporate on our radar right now is Bajaj Auto. The June auto sales have come in slightly lower than what the street was anticipating. On the whole, the total sales have seen a decline of 2%. The domestic sales have gone up 45% at 2 lakh units. While it's up handsomely on a year-on-year basis at 45%, on a month-on-month basis, the domestic sales have fallen by 12%. There you have it. 2 lakh units in the month of June, which compares with 2.28 lakh units in the month of May. Coming to exports, the other piece of this puzzle. Exports are down 32% on a year-on-year basis. They've come in at 1.41 lakh units. But as this chart would show you, it's gone up for the third consecutive month on a month-on-month basis. So exports are seeing some green shoots and they are rising, and month-on-month, the exports are up 11%. Rakesh Sharma, the Executive Director at Bajaj Auto, is now with us to discuss more on their June performance. Mr. Sharma, morning and thanks for joining in. This is Reema here. First, if you could talk about this 12% decline in the domestic sales on a month-on-month basis at 2 lakh units, and what's the trajectory? Could you pick up from this number?
Good morning, Reena. The June domestic sales in motorcycles being lower than May is inevitable because, in the north, there is a mini season of sorts during the period of May to early June or mid-June, which is driven by marriages. And therefore, there is nothing unusual about June being lower. And I would say that July, with the onset of monsoons in most parts of the country, would be lower than June. So it's as expected, actually.
So you're saying July will be even lower than June for the domestic sales?
Yeah, yes, because, mid-April to almost early June is the marriage season in the north that drives up the sales. And then, you have the monsoons in July, and then, late August, September, sales start to improve.
So this decline, sir, So this decline that we are seeing is in line with historical seasonality, right? It's not that there is some other stress that we are seeing, underlying stress in the domestic market.
Absolutely. It's in line with the trends, though I may add that on a retail basis, the industry is now in low single digits. So the industry performance in quarter one, if you look at the Vahan retail data which is coming in, which had perked up really in quarter four, which is the final quarter of last year, to double digits, about 13, 14%, has now in this quarter come down to about low single digit performance.
Okay.
So
right.
that's an important point to note.
All right. Good morning, Mr. Sharma. Nigel on this side. Let's talk about exports because that's the bright spark, right? Whenever you've been joining us, you're telling us things are gradually improving out there, and it's evident in the numbers. Now you're clocking 1.4 lakh odd, and some brokerages are estimating you cross that 1.5 lakh odd in the coming months. That said, could you tell us, will exports on a month-on-month basis continue to improve? And also, since we have been focusing on Nigeria, and the last recorded number I think you told us was around 30,000 units for a month, what was it in the past month?
So exports, like we've been saying, is going to be is now on the recovery path, but the recovery is going to be gradual. I cannot precisely pin down when we will cross 150,000. But yes, that is the next milestone to hit at. For the moment, we will try to see that July is better than June, even if it is marginally so. A lot, of course, depends on Nigeria because it is the largest market. And Nigeria, post-elections, post-transition to the new government, is now dealing with, new set of policies, which I think are all aimed in the right direction, whether it is to do with forex management or reduction of fuel subsidies, which are causing momentary short-term pain, both in terms of availability of foreign exchange and driving up the prices on the street because subsidies are being rationalized. These things will, I think, get digested over a period of 2-3 months. People will get used to new ticket prices for commuting, and hopefully that would see Nigeria come back in a more stable form.
What was the number, Mr. Sharma, for June for Nigeria, sir?
Our retails are at the similar levels. I'd not said 30,000 if I'd said 28,000. And they're around the same region. I don't have the exact number because we'll get it by tomorrow. But we expect it to be in the similar region.
So around just under 30,000 odd. And you told us that the peak used to be about 50,000 in Nigeria.
Yes.
Do you have visibility for those kind of numbers? I mean, a few months down the line? Or you think there is still some distance off?
Yes, so that's what I said, that, the key thing is that there has been a 24% inflation in Nigeria driven by the removal of subsidies in the fuel prices. That has to translate into the ticket prices for the riders going up, the commuters going up, which will bring back the payback and again make buying a motorcycle as a taxi a very good business option. So now that would take a little time, I guess. And once that is done, I think the policies are aimed at getting some sanity in the foreign exchange because there was a parallel market for foreign exchange that is converging to single window clearance. The subsidies are being rationalized. Fuel prices are being set. So they're taking actions to put the country on a stable wicket, and which is very good for us. And I don't know how much time it will take to stabilize, maybe 3-4 months, but the trends are good.
Sir, your peer Hero MotoCorp announced a minor price hike of 1.5%, up to 1.5% over the weekend. Are you looking at any price increases?
Yes, we have been looking at costs and prices based on inputs for Q2 projections and some of the regulatory changes, and of course, monitoring competitive price hikes. So we will be looking at, looking at our numbers and see if there is a reason to take price hike.
Okay, all right. Mr. Sharma, what about the EV focus? You are gradually ramping up there towards 10,000 units a month. There has been a pullback on some of the subsidies. have you seen demand taking a bit of a knock? And also, what kind of a number are you clocking on a month-on-month basis?
Yeah, so, it was a very big jolt when the subsidies were removed, or not removed, but subsidies were reduced.
Pulled back.
And therefore, we as an industry saw the month of May rocketing because people, the news had spread that the prices are going to increase because of the reduction of subsidies. So an industry which was generally doing about 65,000, I'm talking of the high-speed electric scooter industry, which was generally doing about 65 to 70,000 units per month, rocketed to about 1 lakh in May, and it has fallen to 40,000 in June. But if you sort of take average of May and June, which is 1 lakh plus 40, we are back at that 70,000 unit. Now, prices have increased, but we expect the industry to come back to 65,000 in the least. And our plans after, sort of overcoming this little blip, continue to expand our geographic footprint, build our brand, and drive towards...
What is the number, sir? What is the number for Bajaj Auto? We got the industry number for you. What was it?
We build about 7,000 units.
7,000.
Okay. Mr. Sharma, on Triumph, could you do you have a better sense of what kind of, could you make a projection numerically, volume-wise? What would you expect the bike to do? How many?
Well, I'm going to send you a YouTube link for day after tomorrow, which is when we launch in India and we reveal the price. And I think you, along with a lot of people, can make a judgment on that. We'll see how it goes. But I can tell you that after the unveiling in London last week, there's palpable excitement. And without the price being there and without people having seen the product physically, we already have bookings which exceed our production capacity for July. So there is a lot of excitement, and let's see.
What is your production capacity, sir?
Well, the production capacity is a movable figure. We've just launched, we've just inaugurated our new plant. So that sort of will be ramped
what
up.
What is on an overall steady basis, what would be the capacity for this product?
See,
once you've ramped up
that this is a sort of a futile question, that what is the capacity, and because these
you would start with Mr. Sharma, you would start with something, right? You would have, or you wouldn't go in without any numbers in mind, right? See, and then, of course, you would ramp up if demand picks up, etc.
I would invite you to understand how automobile capacities are determined, So I keep getting this question, and that's why I ask. It's an inconsequential question. I mean, if tomorrow if let's say 3 months we had a demand of 10,000 units, we would be able to beat it, because the capacity is a collective of many components from vendors, and the Bajaj Auto capacity in itself is really around the assembly. And therefore, as the demand ramps up, it's quite possible to increase capacities.
So, but you've still not put a number.
There is a Nomura note which says the initial.
In a few months' time, I told you, in a few months' time, it's 10,000. We'll do 10,000. I don't think it serves any purpose to say at this point of time what is the capacity.
Okay, got it.
So there is a Nomura note which came out last week, and they're saying the initial planned capacity of Bajaj Auto Triumph is 6,000 to 8,000 units.
No, I think Mr. Sharma is not telling us.
Because it's fungible, I think, from what he
is. It's fungible, and we'll get the more intricate details in the next couple of days, Mr. Sharma. We'll wait by for the pricing, and analysts will be working on the numbers. I'll be visiting your showroom and
with a check.
First we'll test ride it, and then pricing is important, right? And then, but all the best, Mr. Sharma. Thanks so much for joining in.
Nigel, I see a weakening in your resolve. You know, you were ready to sign the check, and now you're saying
No, the bike
better
is
bang
good.
in your application fast.
The check is in. I mean, and everyone is focusing on the capacity, sir. I just want to get the initial feelers about booking because I want to know how far in the line I am. So, all right, all the best. Thanks so much for joining in. Well, for the time being, though, we'll slip into a short break. On the other side, Mr. Vinod Agarwal of Eicher Motors will be joining in to talk about their June auto sales numbers. And later on, we'll connect with Abhishek Agarwal of Godawari Power and Ispat to talk about the large trade that happened on June 30th. Stay with us.
Welcome back. It's the day of the auto sales numbers, and we've got another management waiting by to chat with us. It's the Eicher Motors CV business, VECV as it's called. The domestic sales are up 12%. And the CV sales in that are up 6.5%. But exports are a bit subdued. Vinod Agarwal, Managing Director and the CEO of VE Commercial Vehicles at Eicher Motors, is now with us on the show. Mr. Agarwal, thank you very much for joining in. While your total sales are up 6.5%, I'm looking at the domestic numbers. And the domestic number is very strong. It's gone up by 12.5% on a year-on-year basis. And for Q1, that's April, May, June, the domestic volumes is 18.5%. So do you think can you continue with this kind of a run rate? And if yes, will you be able to perhaps beat your guidance? Your guidance was for a double-digit volume for this year. Do you think maybe you can push it closer to high teens?
I think that's what we will attempt at. If you go by our first quarter performance, definitely our growth has been very good, and we would like to maintain that. And if you look at the industry, the growth is very good in, you can say, in the buses segment and in the heavy duty segment. But light and medium duty trucks are down a little bit. So exports are down quite a lot. So overall we have grown, and that's what is reflected in our numbers.
So heavy duty and buses is strong, but on the flip side, LCV and exports is a bit subdued. So can you talk about exports a bit? You had in our last interaction told us about the weakness in Bangladesh, Sri Lanka, but are there any green shoots? Do you think exports has bottomed out, or does it get worse from here on in the subsequent months?
It seems that it is at the rock bottom right now, because we have dropped to almost, I'm talking of the industry. The industry exports out of the country has dropped to almost 2,000 units per month for 3.5 ton and above, which used to be around 6,000. So it is 1/3 of the peak numbers in exports. And it is largely led by Bangladesh, because Bangladesh is the large market for us and for the entire CV industry. So therefore, it seems that it's at the rock bottom. And from here on, we should see some growth as we go forward.
You have plans to export to Latin America, right?
We are planned. Yes, we have.
When will that take off?
It has started. We have started with Ecuador and maybe one or more countries. So it will happen slowly and steadily. It is not going to reflect in numbers very soon, but it will. Once it starts happening, then it will happen step by step.
All right. Hi, good morning, Mr. Agarwal. Have you all altered the pricing? Because some costs have gone up, right, as you all transformed to BS6. Could you give us a quantum this year so far?
Pricing has been basically it is coming in from two sides. One is that there is some price increase. The other is there is a, I think, big resolve across the industry to get the discounts at the right levels. So therefore, from both sides, the price management has to improve. It has improved a little bit, but it has to improve more. Let's hope that this should happen.
Buses, that's also another very strong segment for you. In Q4, you had, I think, delivered to the city of Chandigarh. What are the other big bus tenders that are out which could drive bus sales from here on for you?
I think there are a lot of tenders which are in the pipeline.
Which you are participating in, sir, and could fructify.
And I'm sure the payment security mechanism, which the industry had been talking on the electric buses, that should happen. Once that happens, I think the entire industry will participate. As you all know, that last time the tender which came in for 5,000 odd buses, no one participated from the industry because of the tough conditions on the security mechanism, payment security, because we are supposed to give the buses for 12 years on per kilometer basis without any guarantee on payments. So hopefully that will resolve. That has to resolve before the next tenders come in. And that's why the tenders are getting delayed, because it is still not resolved.
So if bus tenders are getting delayed, do you think the bus sales will also be under pressure, right?
Not because of that. Bus sales are also dependent on a lot of other segments. The other segments are doing extremely well, like the demand from schools, or demand from staffing segment, or demand from intercity segments, from private operators. The only delay in the state transport undertaking orders, or the state government orders, which are dependent on this, the entire government backing the payment security mechanism. So I think the demand from state transport undertakings, that is long overdue, because they have very, very aged fleet now, and they have to replace that fleet, and hopefully that should happen soon.
So your heavy-duty truck market share was at 8.3%. It had increased to 8.3% in FY23, and this includes Volvo and Eicher. As of Q1,
Volvo and Eicher put together, it is more than 9%.
More than, as of Q1, it's 9%?
Yes, 9.5%.
9.5%. And as of FY23, that number was?
FY23, it was around 8.5%. So we are up by 1%.
So you've added 100 basis points in your heavy-duty truck market share in Q1. From 8.5%, it's gone to 9.5%. And what explains this weakness in the LCV market, and how long do you think it will last?
I think it is temporary. If you see month-on-month numbers, already there is some improvement. There could be two reasons. One is this OBD2 impact. There has been some buying in March, because March, if you look at the March sales of light and medium duty, that was very, very strong. So therefore some impact of that could be there. The other impact which is there is due to the CNG trucks. If you go back to last year quarter one was still CNG truck sales were very high, and after which it started dropping because of the pricing. CNG pricing became not very attractive. So the second reason is the CNG truck. The earlier people were replacing their old trucks with the CNG fuel trucks. That has got slightly deferred. I think the replacements are now getting deferred for CNG trucks, and then other than that, I don't see any concern, because the economy is doing well and there is good demand from all other segments, e-commerce or fruit and vegetables or auto components. I think the other demand, other segments where the light and medium duty trucks are used, those segments continue to remain strong. The only reason could be the CN.
Okay, sir, we'll leave it at that. Thank you very much for joining in. By the way, the markets are climbing on, and it's courtesy HDFC Limited and HDFC Bank. Remember, the merger between the two is effective. The record date is 13th of July, and these stocks are scaling up 3.5% on HDFC Limited, and HDFC Bank is now up 2.5%. So it's a big day now.
Yeah, I'll tell you what, Remind, HDFC Limited, that's doing better because there was that arbitrage of closer around 1%. So that's why HDFC Limited is doing better. And just pull up the month-to-date chart. You pull up HDFC, either of the HDFCs, and you can pull up the Nifty. just look at that. After a long span, we are seeing that HDFC, those twins, they've outperformed the Nifty. The Nifty is up 4.5% odd in this month, while the HDFC twins are up between 9 to around 10% odd. On the editors roundtable a couple of weeks ago, we put this piece out that, remember, HDFC twins have been relative underperformers in comparison to the Nifty in the last 3 months and the last 3 years. Has its time come, at least in this month so far? Perfect. That's the chart we're looking at. It's been a big outperformer in month to date, HDFC twins leading the way. But time to get back to the broader markets. Godawari Power and Ispat, well, that's the stock on our radar. Multiple trades happened on Friday's trading session. Promoters sold close to 3% stake in the company. Mr. Abhishek Agarwal, the executive director at Godawari Power and Ispat, joins us on the show. Hi, Abhishek. Good morning. Thanks so much for speaking to us here on CNBC-TV18. Well, we know you're in the silent period, but we want some further clarity with regard to this large trade that took place. 3% was sold. Does the promoter entity want to sell more in the company, or is that done? And also, if you could tell us, we have one buyer. We have, Param Capital that's bought close to 10 lakh shares. But who were the others?
Morning, Nigel. As you rightly mentioned, we have diluted some equity in the company. We have been looking to get some base investors on board, and so there was an opportunity, and we have diluted certain stake. And as you asked, what about the other stakeholders? So I would say it's Param Capital and its associates.
Oh, so the entire block was picked up by Param Capital and its associates. Is that correct?
Yep.
Okay. All right. And the promoter stake as of March was 67.5%. So now you've sold close to 3.3%. You would come down, by 3.5% or thereabouts. So around 64% is what the promoter entity holds. Do they want to sell more, or do you think that they're done as of now?
See, at the moment, I think we are done. But of course, as we said, we were always looking to get some good investors on board. So if there's an opportunity which presents later on, we might. But at the moment, I think we're done for the time.
Okay, all right. And Param Capital has bought the entire 46 lakh shares, is what it's telling us, right? Param Capital and Associates.
So I would clarify. So it's Mr. Mukul Agrawal and his associates.
Mr. Mukul, and they have picked up the entire block.
Right.
Lovely. All right. So we've cleared that. Your shareholders will be wondering, what does Mr. Agarwal and family want to do with this money? I mean, it's free. It's your money. So, y'all have built the company. I've seen the company in market capitalization of close to 500 crores. Today, for that 3%, you're raising more than 200 crores. So that's good work. You've created a lot of wealth for shareholders. Should your shareholders watch out for anything with regard to this money that you've raised, or do you all have your plans of your own?
See, the only reason we diluted was because we wanted to get ACE investor on board. No other specific reason. And what we want to do with the money, let's see. So nothing is decided. But eventually, if there is something happening, we'll definitely come out in the open and we'll declare in the market.
Okay, great. What about pricing? How have pellet prices moved? Domestic realization, you were telling us that it was 10% higher than exports. So could you tell us what is the updated domestic price number that you have? I think it was around 9,000 rupees the last time we joined. So what is the updated number? Has it slipped a little bit? And getting into monsoons, is there some weakness?
No. So the numbers are still at the same levels. We are still selling pellets domestically at 9,000 levels. And, I would like to mention here, so we have come out with a new product, from a 65 Fe high-grade pellets. Now we've introduced a new product called 66 Fe pellets, which also we are selling everything domestically at the moment. And we're getting a much better realization compared to a 65 Fe pellets. So that is something new which has, come on board.
Okay, all right. And you'll have not yet started looking at the export market because domestic realizations are better, right?
Yeah, the domestic market is still at least 10 to 50% higher than the export market. So we're still selling everything domestic.
Okay, just to revise, we don't ask you about quarter one because post-year numbers, we'll ask you a lot about that. But for this year, you were looking at pellet sales of close to 1.9 million tons with margins holding around 18 to 20%. Holding on to that guidance?
Yes, we are holding to the guidance. With the market share like this, we are confident we will achieve to, perform as per the guidance.
Got it. Also, you had planned to put up a 1 million ton steel plant, but you were pending some approvals were pending and you were awaiting that. Have those approvals come about? Give us a, Abhishek, if you could give us a timeline and the total capex as well that you will be incurring.
Okay, so there are two approvals pending at the ministry level. One is on the pellet and the beneficiation side, mines expansion. And second one is the 1 million steel plant. So, both the approvals are under process. Things have started moving finally. And we're expecting the approvals to be in hand by end of Q3 or early of Q4. So once we have the approvals in hand, we will start the groundwork.
Okay. And for the steel plant, give us a timeline. By when do you see the light of day? Because big investors are coming in. They don't want you to be just an intermediary, maybe. They want you to start producing steel. And that's the plan you've set for the next few years. So give us a timeline. By which year should we see a steel plant come on board? And also the rough capex, if you'll have a number in mind, because it will entail a few thousand crores.
Okay, so if everything is in place, we should start the groundwork based Q1 of next financial year. And from there on, you can consider 36 months. So we're looking at FY28 for the commercial production of the 1 million steel plant. And on the pellet side, the commercial production should be in place by FY27, Q1 of FY27. So that's the timeline we have set ourselves, to go ahead.
Okay. All right. Abhishek, thanks so much for stopping by and giving us that clarity. Post your Q1 numbers. We'll want further details in terms of, how the various verticals are doing. But good on you all to raise this money. And you've got an influential investor as well that's coming in there. Pellet prices as well holding on to these levels. Good speaking to you. Well, a quick check on the markets. We continue to hold into, well in the green on the headline index. The problem is the mid-cap index. I think we should pull up the intraday chart out there. The mid-cap index has almost moved into the green. So some signs of profit taking in select stocks from the broader markets. Let's pull up the intraday chart. Also pull up the advanced decline ratio. We were talking about how only 200-300 stocks were declining. That number has moved up to close to around 1,000 now as we speak. So those numbers are getting closer to each other as well. Those lines a little bit closer to each other in the last few minutes or so. For the time being though, we'll slip into a short break. Come back. Mitesh Thakur will be back with us. He'll be giving us his technical check. Welcome back. Well, the markets continue to hold with gains of close to around 110 points. As promised, Mitesh Thakur is back with us. Hi, Mitesh. Welcome back. First hour of trade has been good on the headline index. Where do we go from here? Would you take some money off the table on the index and also fill us in with a fresh call?
Okay, Nigel, I think I would want to be a bit greedy. The reason of that is the fact that the bank Nifty has opened the gap up and is still expanding and making new highs. The momentum in the HDFC prints is likely to continue. In the bank Nifty, I think we are now looking at targets from 45,700, 750. So there's still some more space to go. what would be a prudent way to approach the Nifty would be to trade your stop losses now at about 19,200 on the Nifty. And that's the spot level, so about 100 points lower. And hope that it head towards 19,450, 19,500 before you take some profits off. So still maintaining long bias. And on the stock side as well, Eicher Motors is something which has caught my eye early in the day. It's come off the highs, but that's a buy with a stop at about levels of 35.75 and a target of 36.80 can be looked at. And the other one is NMDC. Disclaimer, we have some positions in. That's a buy with a stop at 105.5 for targets of around 111.
Any thoughts on L&T Finance Holding, Mitesh?
Rima is run up a lot. I think, we have had some buy calls earlier on the stock. Now, I'm not sure to buy afresh because of the fact that if you look at the stock price, I think it was around 90 rupees way back in the last week of April. And since then, it's been a one-way rally. I think if somebody is holding it out, just trail your stop to about 123.5 and hold it out. But fresh entry, I think, is not what I'm very comfortable with, given the fact that it's very overbought.
Yeah, big move. March end, the stock was sub 80 rupees and now it's up more than 130. The stock price is now at 131. This month itself, it's seen a rally of about 26%. Mitesh, thank you very much for joining in. Let's get to our 10 a.m. stocks on the move. Mangalam joins in with Kansai Nerolac. Mangalam.
Well, it's a good day for Kansai Nerolac. It's up around 4% over the weekend. They made an announcement to the exchanges that there's been a slight modification in their earlier deal with the Hiranandani Group for real estate. So earlier in Jan, they had said that, the plan was to sell almost 96,180 square meters of the land that the company had in Thane for about 655 crores to the Hiranandani Group itself. And now they've gone ahead and amended that by selling a little more than 900 square meters over and above the earlier deal as well for a little more money too. So now they will sell close to 97,100 square meters for about 671 crore rupees, and the deal has been signed. It's important in a competitive environment for a company like Kansai Nerolac to have some cash on its books as well. The market cap is close to around 25,000 crores with cash and liquid assets at around 550 odd crores. So this would help as the paint industry is currently, entering that highly competitive environment with large players and large capacities coming on board as well. For Kansai Nerolac, for the company itself, there are a bunch of triggers. The biggest one, of course, is the 316 crore capex that they've embarked upon, as a result of which their capacity will increase by about 1.5 lakh kiloliters per annum. And they've also commenced operations at their backward integration facility, so that should help their margins. What would further support their margins is lower raw material costs. So we've seen crude cooling off, and as a result of which all the crude derivatives have cooled off as well. And this morning we're getting auto sales numbers. Kansai Nerolac has a fair amount of their business coming in from auto paints, so that doing well should aid them further as well. And in the paint industry, it's trading at a steep discount to the other leaders as well, trading at around 26 times 2-year forward earnings. So which is why we're keeping an eye out on it.
Okay, all right. Mangalam, thanks a lot for that. So that's stock buzzing in trade. Ultratech Cement as well, that's holding strong in today's trading session. They came out with their quarterly update, and for the last couple of quarters, it's good they've started this. I hope when things get a little bit jittery as well, they do continue that. But these numbers are very, very good. The consolidated numbers are up by close to around 20%. And remember, for Ultratech Cement, you have the domestic sales, which is broken up into white and grey cement. Grey cement is the largest part of their entire mix. So grey cement volumes have grown by close to around 20%. And the overall volumes as well are up by close to around 20%. Now, this is good news, which means they have outgrown the industry, which could have grown by mid-teens. They have grown at 20%, so they've clearly gained market share out there. And on that sort of base, their capacity utilization levels are at around 90%. Explain why the stock is up 1.5%. Vivek, though, joins us to tell us about Mazagon Dock. Vivek?
Well, good morning. Mazagon Dock, we highlighted earlier as well, a very important deal when coming in. So, what's actually happened over the weekend is that the company and the Defense Ministry actually have gone ahead and signed a deal worth over 2,220 crore. And, this particular one is an important one because, the company has gone ahead and got a deal for a submarine named INS Shankush. Now, this particular deal actually aids the strong order book that the company is already currently sitting on. Remember, at the end of March 31st, 2023, the order book was well in excess of 38,750 crore. And now, most of the analyst eyes continue to remain on the execution. Recently, HDFC Securities too wrote a note, and they've highlighted the kind of order pipeline that the company is currently looking at. And according to them, one key trigger is going to be, the Defense Acquisition Council actually going ahead and approving the procurement of 8 corvettes, and the RFP for this particular one is expected in this particular year itself. Why is this particular, RFP important? Because the size of the contract could be worth almost 36,000 crore, and it will be split between 2 shipyards, and Mazagon also has an equal chance of getting this particular order win on its books.
Okay, thank you very much for that. Get into a break. On the other side, it's our special segment. It's the economy. Lata will get chatting with Manish Raj Singhania, President of FADA, and Prakash Diwan. Stay tuned.
Welcome back on It's the Economy. We stick with the theme of the morning, auto sales. Auto sales numbers for June have started pouring in, and it appears that many giants like Maruti, Hero Moto, Bajaj Auto and TVS have missed market estimates. However, companies offering premium products like Royal Enfield and Tata Motors' EV vehicles have done well. To give us a ground check on how much to worry about these June numbers and how's perhaps festival stocking picking up, I have with me Manish Raj Singhania, the President of the Federation of Automobile Dealers Association, the FADA as we know them. Also joining me is Prakash Diwan, undoubtedly one of the best auto stock analysts that we know. Gentlemen, thank you very much for joining me. Mr. Singhania, first to you. Can we start with two-wheelers? The numbers that came in, all of them, Hero Moto down 9.9% year on year. So you can't even say seasonality. And Bajaj Auto as well, lower than market expectation, down 2%. Market was expecting a 1% higher number. TVS as well, lower than market estimate. How was the experience at the auto dealers?
So, yes, definitely, two-wheeler has been a cause of worry for the auto dealers as such. And we have been repeatedly seeing that compared to pre-COVID year 2019, two-wheeler segment has not been able to perform up to the mark. And in fact, it is, if you look year-on-year basis, we are still down by almost 19%. But what is good about last month, we are expecting a good single-digit growth in YOY basis in overall two-wheeler segment. So yes, I think primarily we could attribute because of the stress in rural economy, the cost of acquisition going up, the cost of operations going up in terms of EMI, fuel cost, everything has gone up for that segment. So that segment really continues to struggle, and numbers are really, of all these segments in auto industry, every segment has now outperformed the pre-COVID level except the two-wheeler.
Okay. But two-wheeler, are you seeing any green shoots at all now that the monsoons are not the scare that we thought it was? Are you seeing any interest in pre-festive stocking, Mr. Singhania?
So yes, definitely monsoon would play a very critical role for the upcoming festive season. And I think we not only, government has also supported in increasing the MSP. So if we do have a good crop and good rains evenly spread across India, and timely rainfall also, that will ensure a good quality and quantity of the crop. And this high MSP will ensure money in the hands of farmers. So that's a good sign. We are keeping fingers crossed for the monsoon season. That would play a very critical role for the entry-level passenger car as well as the two-wheeler segment.
Okay, so but that is still a matter of hope, and hope isn't a data point. I'll just come to you for the premium segments, which appear to have done well. Mr. Singhania, let me get Prakash in. Prakash, you've seen the rush of numbers in the morning. Are two-wheelers still a no-no for you, or are you enthused by the improvement in exports?
Lara, good morning. So, I think what we saw in terms of the numbers, now that the entire set of numbers is out, it does tell you that demand is an issue, especially in the price-sensitive segments. And that's exactly why a Hero MotoCorp is suffered significantly. And the other thing that you need to put in perspective is that the affordability of two-wheelers, which is a very price-sensitive segment of consumers, given higher interest rates having been passed on, and I was comparing the EMIs for two-wheeler loans as compared to last year, and there's a significant jump in that. So either the tenors go up or the outgo goes up, and that is something which does make people think a bit much harder to go and acquire. The monsoon is probably something that builds hope and expectation that, if I'm a consumer and I see monsoons coming on time, I would probably start planning to do it post the monsoon. I'm not going to do it during the monsoon. In fact, the quarter that we are currently starting off with will probably see even more tepid sales, especially on two-wheelers, because nobody likes to use two-wheelers in this season. And generally the belief is that you would buy it after that. So I think the numbers tell you a very realistic story. The export market has probably got both, pluses and minuses. There are pockets doing well. There are pockets that are still struggling. But I would believe that it's a domestic story that's still going to be a bit disappointing.
Okay. Well, Bajaj Auto just told us that the export scenario has bottomed out, and their key market, Nigeria, is on the mend. But as you point out, the bread and butter the bulk is still going to be domestic. Mr. Singhania, what about the luxury segment, premium segment? Royal Enfield has done well. So, would you say that, say for instance, the Triumph will come? Do you think there is situation is much better in the premium segment, even in two-wheelers?
So yes, definitely premium segment post-COVID has been doing phenomenally well, and a lot of purchase and activity happening there. Both in actually car segment and two-wheeler, we have seen this segment, upper middle class and upper class, really going out and spending out loads of money. There was this pent-up demand which got addressed to, and subsequently also people executed or just bought up whatever their fancy products for their holiday season went a phenomenal high, new high. So everything in this segment has been looking good. Similarly, in two-wheeler numbers for this premium segment has been doing pretty good. And month after month, I don't see any kind of downfall or any kind of. In fact, the supplies are more of an issue in this segment because the more the features in any vehicle, the higher the quantity of semiconductor requirement is there, and we definitely see the issue of semiconductor continues, shortage of semiconductor continues in overall auto segment. So I think for premium two-wheeler space, the growth story will continue.
What about cars now? It looks like the entry-level car segment also has not done well. I mean, Maruti was complaining about the entire compact size, which is about 40% of their sales, not doing well. So can you give us more color on the car segment?
So car segment, yes, definitely entry level has been struggling. Similarly, I would comment here the cost of for that entry level person, the cost of acquisition has really gone up. If you look at it pre BS4 times, the initial entry level two wheeler were around 40,000. Now after BS6 and with new norms and new compliances that have come into place, the new the entry level cost is now close to 60,000. So that is a phenomenal increase of 50% there in terms of cost of acquisition. Similarly,
what about four-wheelers? Four-wheelers.
Yeah.
Four-wheelers, cars.
Yeah. Cars also we have seen from 2.5 it has gone to close to 4 lakh. So everything is going up for that segment, and for that person, an increase in EMI, cost of acquisition, cost of operation really matters a lot. And similarly, you can see the boom in SUVs happening in passenger car segment. That segment is really going up. We really need to see when this, Bharat of India or rural India recovers, then only we could see a good growth or, decent numbers coming in from entry-level passenger cars.
Okay. But you are confident of the luxury cars, I mean, not luxury, the premium cars, Tata Motors EV as well as the premium offerings from Maruti, those are seeing, SUVs are seeing better demand?
Yeah. So, yes, this month has been doing very well. I mean, I think June, we are yet to come out with the final figures. We'll be coming on 6th. But I think June would be having the ever highest passenger car sales for the month of June. So that's the kind of volume that we are seeing. And it would be primarily contributing by SUV segment that has really been driving this sales of this segment. The demand as well as the booking with the dealers are amply available. And we kind of strive to have this bookings addressed by the OEMs. Though we do talk about that there is a paid-up stock of almost 45 days in PV segment. That is primarily due to mismatch of models. There are models which are not selling, which are available with the dealership. And there are models which are in heavy demand, primarily SUVs, which are not being adequately supplied by the OEM. So yes, there is like a tale of two cities story.
Okay.
So we expect this growth and volumes to keep on churning in passenger car segment.
Okay. Well, Prakash, how do you translate all this in terms of stock-wise positions that you will take? Are you looking at taking a position in TAMO because the EV is doing well? Or is it that that's too small a segment and they've reported that their commercial vehicle hasn't done too well? What's the pick of the pack?
So, Lata, just let me step back and add to this premium car segment, configuration that's changing so rapidly. What we are seeing is that the price-sensitive entry level or the A and B segment is getting impacted, and most of the new competition, whether it's from MG Motors or from Hyundai or from Kia, is actually in the D segment. So that's where the game is shifted. And I'm not surprised when Maruti reports these weak numbers for that segment, those two segments. But D and onwards, which is the SUV and the higher price ones, look at the kind of bookings Toyota has for its high value products like Hyryder and things like that. There is no let up in that. So what it tells you is that the companies that are focusing on the right segment for growth, That is what you need to look at in terms of an investing opportunity. And from that perspective, Tata Motors has had a brilliant run because they were the first to have launched EVs at different price points, right, from 15 lakhs to 9 lakhs. But it's not that strong enough or significant enough, as you rightly said, to move the needle. And the commercial vehicle sales, I think, is a function of the BS6 implementation. A lot of deferment happens when the new norm gets into practice. So that's where you'll probably see that catch up happen. I would look at buying into Maruti for sure. And as a disclosure, I've always had this in my long-term portfolio, given the fact that their SUV portfolio is what's going to drive growth. The Fronx, the Jimny, all of those are going to lead them to the next level. I would believe M&M would face some competition on all counts, the SUV portfolio, the EV portfolio, and some of the light commercial vehicle where Maruti is making a big market share improvement. So the dynamics are very clear. You want to buy commercial vehicles, Ashok Leyland is the spot to go to. You want to buy a passenger car segment player, Maruti is probably standing out as the best. Tata Motors has had a run-up. I'm not saying there's not much of salience left, but then there are more balance sheet restructuring and debt repayment, which will drive that stock further, not just operational performance.
Okay. But just a quick word, Mr. Singhania, on CV, on commercial vehicle, we got a kind of a mixed picture. What are your members telling you? Volvo was not all that gung-ho, but he said the demand for buses were good. Tata Motors definitely doesn't look good.
So yeah, CV has been recovering pretty fast and pretty good. I think we'll see a YOY basis. We'll see definitely a growth in this segment. And we are almost close to recovering the 2019 numbers. So yes, and the economy has been moving fast and moving forward. We could see bulk buying happening in CV space. Even in fact, before pre-COVID time, there were very small operators coming in for the truck, 1 or 2 or 4 quantity being bought. But normally we are seeing now bulk buying happening in large players coming in and buying in quantity, fleet operators coming in. So that's a good sign. And overall, a very positive for the overall CV segment, especially the HCV and MLCV segment.
Okay. Well, Mr. Agarwal from Aisha was a little downbeat on the mid and the LCV segment, but very confident of the bus segment, the heavy-duty segment. But let's see how things pan out. CV is not that much a spot of bother, as is perhaps the entry-level vehicle, whether it's four-wheeler or two-wheeler. But premium cars and two-wheelers doing exceptionally well. Prakash and Mr. Singhania, thank you very much indeed for joining us and giving us your thoughts about the auto sector. We wrap up on Bazaar. Chartbusters up next.